All right then, folks, let's talk about entry models, right? You guys are waiting for. So just a quick recap here on the 5 a.m. model. Okay, we have this. Uh, well, let's start here. Okay, uh, we have the time window, right? 9 to 11, right? We have the assets, euro, and I'm gonna put an N here because you know GBP, right? 5 a.m. 4-hour candle, right? Mark the highs slash lows. Okay, wait for the purge. I'm gonna put like wait for the purge. Okay, and then entry. And this video is going to be about entry. Okay, so assuming, right, that you already have marked the highs and lows, you're in the correct timing window, you're in the correct asset, okay, correct pair. What we're going to do right now is look for entries, right? And entries could be in two ways, okay? We have the 15-minute entries, okay? And we have the 1-minute entries, right? And if you ask me, I prefer the 1-minute entries, okay? Because it's always going to be more profitable than the 15-minute entry. So why is the 15-minute entry up here? Because it's a more safe play, let's say, right? You can use the 1-minute entry. It's more aggressive, right? Like put a this plus here is more aggressive, way more aggressive, right? And you have this 15-minute entry that is like more conservative, right? So here you have more risk reward, you have more trades, you have more money, right? But you also have more stops, right? It's inevitable. You're going to have more stops in the 1 minute, okay? If you don't like stops and you don't care too much about risk reward and stuff, like go for the 15-minute. You're going to have less stops, right? You're going to have less stops, less trades, less drawdown, kind of, because you're gonna make less money than 1 minute, right? But it's totally up to you. Okay, it's totally up to you. So I will start with the 15-minute entries, okay, and then I'm gonna pass to the 1-minute entries, right? So the 15-minute entries, what we want to look for, I'm gonna put here 15-minute entry model, okay, entry models. Is basically when you purge, let's say this is the high and this is the low of the 5 a.m., right? 5 a.m. right here, 5 a.m. You have the high and low right here, okay? When happens to purge right here, what you're going to look, you're going to drop to the 15-minute time frame, okay? And you're going to look for a CRT happening right here. So which means that you're going to look for the candle number one, candle number two, right? Like this. And then candle number three, right? So basically how this works. If you don't know about CRT, here's a quick lesson about CRT. CRT is just an entry model, okay? Candle range theory when you got three candles, okay? And the first one is going to be impulsive candle. Is a large, huge candle right here, okay? It's a big candle, right? Needs to be no wicks, okay? Or the less wicks possible that you can get, okay? The second candle is going to purge this candle high like this, okay? Made a wick, okay? Retrace back into this candle range right here, right? Close inside of this candle range, right? And this is your confirmation. When you have this candle number one, like strong candle number one, okay, you're going to have your candle number two, right? With almost all times is going to be the like small body and like more large wick up here, right? Purging this candle high and closing inside of this candle range, okay? Your entry is going to be on this third candle right here, okay? So in this case, it's going to be a short, right? So you're going to short here in this candle opening. In the third candle, when the third candle open, okay, you place a short right here since this candle closed inside of the range, right? Your stop is going to be right above, okay, this candle, so a few pips above here, right? And your target always, 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 and this is for the both entry models, right? In the 50-minute or the 1 minute, okay? It's gonna be always in the 50% of this range. So you gotta grab your tool, fib tool or whatever. You can use the GAN box as well. Where is my GAN box? Right here. Okay, right. You have this GAN box. You can set up for the 50%, or you can set up your fib tool for 50% also. So you grab this entire range right here, right? The 5M range. Go to your fib tool, mark the 50% like this. Okay, this is quite messy, but all right. And your target's going to be always in this 50% area right here. Okay. So basically, this is how you're going to approach the 15-minute entries. Okay, and some doubts about you guys. I know that you guys have this kind of doubt, right? And it's totally okay. Is about this first candle right here, right? Uh, let's say this first candle right here, right, did not break the high. This first candle is like this, okay? And then the second candle comes here and broke the high, okay? Do you guys think this is a valid entry? Think. Okay, this is a valid entry, okay? Since you have the candle number one, okay, you need to have the purge, right? Can be on the candle number one or can be on the candle number two, whatever, right? Doesn't matter. As long as you have this candle number one here, okay, this candle number one with this appearance, okay, needs to look like this, needs to be a candle like this, okay, and you have a purge can be on this candle like this, can be like this, can be like this, whatever, right? Can be like this, right? Like this, no problems. Or you have this candle inside the range and the candle number two is going to be the purge. It's totally okay because you have to you need to have those two requirements. Let's say, right? You have to have the candle and you have to have the purge, right? And the third requirement is this candle number two close inside of the candle range, right? And then you can chart here. Of course, your risk reward is not going to be as good if this candle is move up higher like this, because instead of you took, let's say, a short like this, right, until the 50%, let's say here, this is not the 50%, this is the 50%, okay, let's say here, you're going to have something like this in this scenario. So, right, so as long as this candle moves away, right, you're going to improve your risk reward. But it's an important question here. If you see something like this happening, like this candle here, okay, and this candle here, and another candle here, like this, another candle here, let's say like this. This is not a reversal, okay? You see clear intention and a lot of time spent out here pushing price higher, right? What you want to see is price rejecting this area right here. So you don't want to see price moving up with strength up here, okay? Another candle, 15-minute candle, because remember, this is all 15-minute candles. So it's a lot of time inside here. Another 15-minute impulsive candle, and another 15-minute impulsive candle. This is a clear acceptance through this level right here. Players did not want the price move down. And it's completely different when you have something like this, maybe this, okay? And then you have weeks. Let's say this. Why is not getting bigger? That's what she said. Um, Something like this, and you get rejection right here. This is clearly showing you rejection, right? This is clearly showing rejection. Like price did not wants to go up, is rejecting, right? So yeah, I guess 50-minute entries is covered, right? Let's go for the 1 minute right now, okay? And I'm gonna show in the charts the examples of it, just real quick, okay? So 1 minute entry model, right? You have the same thing here. You have the, oh my God, you have the 5 a.m. range, okay? 5 a.m. high, you have 5 a.m. low, right? This is your range, okay? What's going to happen is now you are in the 1 minute time frame, okay? And I think, like for me, it works best on the 1 minute time frame. I prefer work with the 1 minute time frame, okay? So what you're going to expect, okay, like let's say price is moving up here and doing this shit, and here, like right here, you have your 9 9 9 a.m. clock, right? Time window, okay? And now I have the price doing something like, oh, this is not cool. Something like this, okay? Right. And then push lower and then come back and like this, okay? What you want to see in the 1 minute, okay? Let's say this is the 11 and we're here. So you want to be inside of this time zone, right? Of course. And what you're going to look for is first thing, you're going to wait for the purge, like this one also. Okay, you're going to wait for the purge. You don't want to trade if there is no purge. So first thing, you're going to wait for the purge. But this is kind of more simple. Uh, you're just going to look for IFG here, IFG, right? Let's say that you have a fair value gap right here in this impulsive lag, right? Let's say it is a bullish fair value gap right here, impulsive, impulsive, impulsive. You have a fair value gap right here, okay? And then you're going to look for this fair value gap to be reversed and becomes an IFG, okay? As soon this IFG has been taken, okay, and the candle close with the body below the IFG in this case, because we're looking for shorts, right? If you look for longs, it's the opposite, okay? But in this case, if the candle close below right here, candle close below, okay, you're gonna take your short right here, right? When the candle close out of the IFG, broken the IFG, stop above the high, of course, and target the same, the 50% off. Grab your tool, measure the 50%, okay, and just go for the 50%. It's simple as that, okay? So, practical examples of this. Let me just erase this for not be so much polluted on my charts because I really don't like it. Okay. So this example here, we have this Monday example, right? We have our 5 a.m. range right here, 5 a.m. range, okay? Market's pushing, 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 okay? And we have an inverse fair value gap here, never been taken, another one here, another one here, another one here, and the last one here, okay? So this is going to be your guidance, okay? Since the market's doing new inverse fair value gaps moving away, okay? The last one is going to be your valid one, right? In this case, we have this inverse fair value gap here that we short, okay? So you can see clearly here, let me zoom in a little bit. You have this inverse fair value gap here. So you get the first candle, second, third, you get this gap right here, you get the fair value gap. In this case, is quite large than should be, okay? But doesn't matter because what you want to see is this bottom right here in this case, right? And since the price close below it, broken it, okay, you're gonna enter short here, you stop above the high, okay, aiming for the 50%, like this, okay? Okay, so we not talk about that yet, but uh, the amount of trades that you took in the day, right? But in this case, we got stopped out. We make a new structure right here. Remember the structures. We have this lesson, right? The structures. So for this inverse fair value gap here to be valid, it needs to be in a new structure like this. Okay, if you have something like this, and here you have inverse fair value gap, like here, this is not valid. Okay, it needs to be in a new structure. In this case here, okay, this is not valid. Okay, if this inverse fair value gap was like here, in this case right here, okay, sorry, this fair value gap here, this is not valid because it didn't broke above here. Okay, right. So here you have a structure has been broken. Create a new inverse fair value gap. Wait for the candle close below it. Once the candle close below it, you short, stop above, and aim for the 50%. Okay, right here. And here we got how much? 5.3R. So in this day specifically, okay, in this day specifically, it took a long time. It really took a long time, this trade right here. This is not usual, okay? This is not usual, but it happens, all right? So in this day, we close 4.3% positive, right? That's a lot. So let's see in this case if we have the 15-minute entries, okay? So we had an example of 1 minute entry. Let's say if we have the 15-minute entry, okay? And like I said, we do have, okay, and I'm gonna raise this for be more clear. Oh, sorry, no, the 5 a.m. range I will not erase. Okay, we have here. So you have candle number 1 right here. Okay, I'm gonna put this trend line here. I'm gonna make it thicker, right? Candle number 1 here. Not going to mark the low because it doesn't matter for us. Okay, have candle number 1. Candle number 2 didn't purge, so not valid. Candle number 3 close above. If the candle close above, this is not valid anymore. Okay, and your new candle, right? Your new candle number 1 is this big guy here. Okay, so here you have your candle number 1, right? I can mark like this for be more, you know, good for you guys to see it. And then you have your candle number 2, exactly like I said. Okay, candle number 2, purging the high, right? Purging the high of this candle outside of the 5 a.m. range, right? And candle number 3 is going to be your entry. In this case, this distribution candle, right? So what you're going to wait is candle number 2 close inside like this, and then you're going to enter in the opening of the candle number 3 right here. Put your stop above, right? As usual. We almost get stopped out in this trade, right? And then you're going to target the 50% of the leg, okay? Very easy, right? In this case, we also have a better risk reward and we spare a stop, okay? But you're going to see that a lot of days that you get a trade in the 1 minute, this trade didn't happen on the 50 minutes, right? So that's the deal. Sometimes you're going to have the 15-minute trade and the 1 minute trade. In this case, the 15-minute trade is better because we didn't stop out one trade before and we got a better risk reward, right? And the other case, you're going to have the 1 minute trade and the 1 minute time frame trade, right? And you're not going to have the 15-minute time frame trade. So it's up to you, right? Sometimes you get it, sometimes you don't. So it's up to you. In this case, it plays better on the 50-minute, right? But usually in the overall of time, the 1 minute it's more profitable. Okay, but it's up to you completely to choose whatever you're going to use, right? And okay, so I guess we covered all about the the entries. Okay, we have those two types of entries, right? And probably the next video we're gonna talk about risk management and how to approach the trades with all this concepts that we are discussing for the the, the last few sessions, right? So see you guys on the next video, right? Be fine.